All right, welcome back to Stock Tricks with Nick for the Trading 101 kickoff episode. Today, I'll be covering the goal of this series. I'll be introducing the team. As you guys can see, we have Amanda, Daniel, and Ryan here. And we'll be covering the different account types, choosing a brokerage to start with, and the amount of money that you should start with. So if this is your first time tuning in to Stock Tricks with Nick, my name is Nick. I make a breakout watch list on Sunday morning, do a live stream on either Tuesday or Wednesday, depending on how the week's setting up, and a full trading recap of the stocks that I traded on Friday. And many people on YouTube and TikTok and Twitter always show their biggest wins. This channel is very different. I'm 100% transparent. I'll show the wins, sure, but I especially try and show my losing trades because you learn the most from your losers. In this Trading 101 series, we're going to step back. So if you have been to a couple of my live streams or you've seen the breakout watch lists or the trading recaps, I kind of just jump right into the deep end with all the technical analysis, all the buy points, sell points, risk management. This series is meant for the beginning trader. If you're interested in that, please leave a like on the video, subscribe to the channel, and follow me on StockTwits, Twitter, and TikTok. Quick disclaimer, anything that I say is not financial advice, not stock advice. This is all for educational purposes only. Please do your own due diligence before trading. Trading comes with financial risk. All right, so Trading 101, the series goals. I want to be able to provide you guys with a course for brand new traders or people interested in trading that is 100% free and something that I would have loved to see when I first started trading. In these videos, each week we'll be going over different topics and building up a trading rule book. So that can go from buying rules, selling rules, risk management, and any topics that you guys want to cover. And that's where the comment section will be really important. If you have any questions over what we're covering, drop them in the comments. If you have any topics that you'd like me to cover, drop them in the comments. Use the comment section to your advantage, and I'll be responding to all the comments that I get. Third, I want to create a trading community. So there's actually a great trading community on Twitter if you follow the right people. So if you go to my page, Stock Trick Nick, and then just follow all of the people that I follow, that'll give you a good group of traders. The fourth point, and for sure the most important, is we want to make money here. We want to compound our capital with minimal risk. And I do that by trading the most aggressive growth stocks, but with equally aggressive risk management. And we'll get to all that in later episodes, but just a heads up, that's the type of trading that I do, and that's what I'll be sharing mostly. But in many of these episodes, we're just going to the basics. We're going to build out this trading rule so you feel comfortable making those types of trades. And five, as you guys see with Amanda, Dan, and Ryan here, I want to teach 3 of my friends who have never traded before how to trade. So with that, let's meet the team. All right, first we have my friend Ryan.
Hey, what's up, guys? So my name is Ryan. I'm a clinical exercise physiologist. I am 28, so never really invested. I want to because I didn't even have a Roth IRA, and I want to get started on the very basics of investing and smart investing.
Yeah, so Ryan was one of my roommates in college. We actually, all 4 of us ran cross country and track together, and that's how we know each other. But important to note that each of these people very positively contributed to the Stock Tricks with Nick YouTube channel. Ryan did so by becoming my first investor. When I first started trading, or when I first started the channel, I was just trading my own money. And because of that, I didn't feel the need to stick to specific risk management strategies, buying and selling strategies. So he was one of the first person to jump in, say, all right, here's just $100, start with this. And I felt more obligated to do my homework, set up those trading strategies that we're going to be talking about later. And it's paid off for both of us. So thanks, Ryan.
Absolutely.
Amanda, do you want to go next?
Yeah, sure. So I'm Amanda. I am 25 years old. I'm a digital marketer and a freelance photographer. And so, yeah, I'm also Nick's girlfriend, and so that's probably important to note. So I hear him talk about trading a lot, and so I'd like to learn a little bit more about it.
So Amanda was asked to be on this series. She hears me talk about stocks all day, so want to see how good she can be at trading them. Big thanks to Amanda, as she makes all of the thumbnails for Stock Tricks with Nick. So if you ever saw those and are like, wow, that's really catchy, that's all Amanda. So thank you for doing that and putting up with my constant talk of stocks and investing. And now we got Dan.
Everyone. So I'm Dan, 25, and I work in advertising, specializing in analytics and ad operations. And as far as my background with investing, I pretty much just have a Roth IRA, but I'm kind of curious about just investing in single stocks. So that's why I'm here to just learn from the best YouTuber I know.
Dan was the person that came to me, like Dan and Amanda, and said, Nick, you should start a YouTube channel. This is something that you're passionate about. We both watch a lot of personal finance YouTubers, and Dan really pushed me to get started on this. He's been a huge help with the channel. So thank you, Dan, for all the work that you do on the channel. Thank you, Amanda, for the thumbnails. And Ryan, thank you for believing in me with some of your investment. All right, now that you've met the team, let's get started. You are interested in investing. What do you have to do first? You have to choose an account type. So there's two different main types of accounts. There's retirement accounts, IRAs, individual retirement accounts, and just individual brokerage accounts. So let's start with individual retirement accounts, IRAs. Have you guys heard of these before talking to me?
I've heard of them, but that's about it.
Yep, started one during quarantine.
Nice.
Yeah, I heard about them through you, so not before that.
Yeah, I actually, I've been big into personal finance and investing for a while now, but like many people, I didn't start by opening up an IRA. I started with an individual account with Robinhood. And that's not actually the best place to start because there are some major tax advantages that come with IRAs. So with a traditional IRA and with a Roth IRA, because there are tax advantages to this account, the government limits how much you can put into the account at $6,000 each year. If you're over 50, the government allows you to play a little bit of catch up and you can put in up to $7,000 each year. Now, say you're watching this video and you're like, oh, I want to contribute as much as I can to these types of accounts because I want to shelter some taxes. You can do so for the accounting year 2020 up until April 15th of 2021. So right now you can put in $6,000 for 2020, $6,000 for 2021, have $12,000 in that account if you act fast.
So if I only had 6,000 and I just opened up my Roth, would it be best to invest in the 2020 because then I have that and that's done before April, and then I can focus on 2021 when I have the money?
That is a great question and absolutely the right answer. Because think about this, you're only allowed to contribute $6,000 a year. So the more years that you can put away, the larger that kind of tax-free pile grows, even without being invested. So always kind of push your contributions to the earliest year as possible. So it gives you more opportunity to put money away in a tax sheltered account. Great question. With a traditional IRA, there's no income limits. So we'll get to that with the Roth in a second, but no matter how much money you make, you can always contribute $6,000 to that traditional IRA. When you're contributing to a traditional IRA, you'll do so on a pre-tax basis. So whatever money you put in there, you get to write off on your taxable income come tax season. So say you're making 50 grand a year and you contribute $6,000 to your traditional IRA, your taxable income can be brought down from 50,000 to 44,000. So 50 minus 6, 44. And then you'll owe less taxes come tax season. So if you're getting a refund, you're actually going to get a larger refund by doing this. So that's the tax advantage that you see in a traditional IRA. So when do you actually pay taxes on this account? When you withdraw the money after 59 and a half, that's when you'll start to pay taxes, depending on your income at the time that you withdraw the money and the tax rate that the government sets. There are taxes and penalties applied if you withdraw any money early from this account, which is a downside, but the government gives you this opportunity for the tax-free or the tax advantages to keep your money in an account, not touch it, and have some savings for retirement. So it wouldn't make sense if they're giving you a tax advantage and you're still just taking money out. Next, we have Roth IRA, and this is one that I personally have, but depending on your situation, both provide tax advantage and probably something that you should take advantage of before opening up an individual brokerage account. With the Roth IRA, same contribution limits, $6,000 annually, $7,000 if you are over 50. With the Roth IRA, there are income limits. So if you're making over $125,000 as a single person, the amount that you can contribute to the Roth IRA is either shrunken down or you're not allowed to contribute at all. And that applies as well if you're married and you make over $196,000. Now, the difference in taxes with Roth IRAs is you're contributing post-tax dollars. So whatever you make from your paychecks at work, you put into this Roth IRA. When tax time comes around, you are not able to take a write-off with whatever you contributed. But the bonus is whatever you have in that account grows tax-free, so you can trade it, you can invest it as much as you want, make as much as you want in the account. And when you go to pull the money out, it's never taxed. So this is extremely powerful if the government raises tax rates or your income at retirement is larger than it was when you made those contributions. So personally, I don't think the government's going to be lowering taxes in the future. And I hope to be making good money in retirement. So I went with the Roth IRA, but depending on your personality, your thoughts about government taxes, you can make the decision for yourself. And the nice thing about Roth IRAs as well is whatever you contribute, because you contributed post-tax dollars, you always have access to that money without any penalties or taxes. So say I contributed $6,000 to the account in 2021 and something happens and I need rent money, I need to give my parents money, anything like that, I can always take out the $6,000 that I contributed to the account. I'm just not allowed to take out the gains that I made on the account. Traditional versus Roth, really quick breakdown, same contribution limits. With traditional, that's pre-tax money going in, larger tax write-offs, larger tax refund. Roth IRA, you don't get to write anything off. It goes in post-tax dollars. Both accounts grow tax-free until you take the money out. With the traditional IRA, you take the money out and you get taxed on whatever you're taking out. With the Roth IRA, when you take money out, you don't get taxed on that. Both have a 59.5 age withdrawal limit. That's when you can start taking withdrawals. And then with a traditional IRA, taxes and penalties apply to anything that you withdraw earlier than 59.5. With a Roth IRA, you can take money out before 59.5 as long as it's your contributions, not your gains. All right, so how does this differ to your individual brokerage account? So many new traders start with Robinhood. I started with Robinhood. That's an individual brokerage account. There's no tax advantages to this account. But because there's no tax advantages, there are some looser restrictions. So there's no contribution limit. You can contribute as much as you can to this account. No limits there. No income limit. So no matter how much you make, you can always put as many dollars as you want in the account. And there's no penalties for withdrawing the money. So it's much more liquid. You can always get at your money when you need it. When you're contributing money to it, it's going to be on a post-tax basis. So think you get your paycheck from work, taxes are already withdrawn, and you're using that post-tax dollars to fund your account. Taxes on your gains are going to be taxed each year, which is a big difference between the individual retirement accounts, the IRAs. So if you buy and sell a stock within the same year, that's called a short-term capital gain, and that's going to be taxed at your normal income level. If you hold a stock that you bought for over a year before selling, so 365 days, and then you sell, that will typically be taxed at 15%. If you make, it's like over 440,000, it'll be taxed at 20%. But for most people, long-term capital gains is 15%. And you can write off any losses that you have, but it's going to be a $3,000 limit per year. So say I lost $10,000 trading this year. I can write off $3,000 on my taxable income this year, $3,000 next year, $3,000 the third year, and $1,000 the fourth year. So you spread out that capital loss over as many years as you need to with a $3,000 limit each year. Let me pause there. Individual brokerage accounts. What questions do you guys have?
I don't have any, but I think it makes sense. Why it might be a little bit better to have maybe to open up a IRA, some sort of IRA, rather than having an individual brokerage account. It seems like there's a little bit more of an advantage there.
Definitely. Tax advantage is huge. I already made a video about Roth IRAs, how it's almost $1 million difference, and I'll link that up here.
Hey, Nick, quick question.
Yeah.
Can you explain the difference between short-term and long-term capital gains?
Short-term capital gains, say you are a day trader, or say I buy Apple today, and then I sell it in 11 months from now, anything within a year, and I made money on the trade. So say, not Apple, say I bought a stock for $100, and then within a year, I sold it for 110. That $10 is your capital gains. And because I made that trade within a year, that's taxed. That $10 is going to be taxed at your current income tax level. So that's called short-term capital gains. Now, say I bought that stock at 100, and then I waited a full year or longer to sell it. Say I made $20 on the trade. Because I held it for over a year, it's taxed at a lower rate. It's taxed at that long-term capital gains, which is typically 15%. For most people, it's 15%.
At what point would that not be 15%? I mean, is it all across the board always? Unless you're talking about income level, like you said.
Yeah. So if your income is over, I think it's like 440,000. I'll link that below. All of the a bunch of articles to this in the description of the video, but I think it's like 440 something thousand is where that long-term tax rate goes to 20%. So still 20% is going to be for most people under the current income tax rate for the short term. So there's a tax advantage to holding positions longer. And number 6 might not make any sense because all I've been hearing in the stock market is stocks only go up. But when they do go down and you have losses, you can write those off against your taxable income, $3,000 max each year, but you can roll that out as many years as you need to get to your break even. Now that you know the different type of accounts, you need to find the right type of broker. So this is just the companies that will house your accounts. So I broke up this list of, 7 different brokerages, 7 of the more popular ones. So everyone starts with Robinhood. Most people start with Robinhood, and those only have those individual type accounts. So no tax breaks, no Roth or traditional IRAs in that, or with public. They're just individuals for now, individual accounts for now. Maybe in the future they'll have IRAs or paper trading, but right now just individual. With Fidelity and Charles Schwab, you have the ability to choose between individual account and an IRA. And then with Webull, E-Trade, and TD Ameritrade, you get those IRA options, individual accounts, and most importantly to this Trading 101 series, they also allow you to do paper trading, which is basically like fake trading where you can put in as much money as you want, like paper money, and then practice trading strategies, risk management. So that's what we'll be using for these 3. There'll be paper trading using Webull. We'll break down some past trades of your guys's, see what you guys did well, see what you could work on for the future. So if you're new to trading and you want a broker that allows that paper trading, Webull, TD Ameritrade, and E-Trade all allow those. I'm sure there are some others, but couldn't put them all in here. For the chart breakdowns that we'll be doing in the future, that will be with Webull. So if you want to trade along with us with paper trading or real trading, you can get 2 free stocks from Webull, valued between $8 and $1,400 when you sign up with my account in the description below. All you have to do, sign up, deposit $100, and then they give you 2 free stocks, again, valued between $8 and $1,400. And then you can trade in there. You can have your money in a Roth traditional IRA or in an individual account, and you can practice trading with the paper account. All right, so now you've picked your account type, whatever that's going to be. You have the brokerage, you have your account set up with the right broker. Now, the next question is, how much money should I start with? So I want to break this down into two possible options, starting with real money and starting with paper trading, paper money. If you're starting off and you're trading with real money, I would only put the amount that you can afford to lose completely in the account. Many traders, myself included, have lost full accounts in the past. Many professional traders have lost full accounts in the past. So with that being said, be very careful with the amount of money that you put in, real money, into a trading account with the idea that you're going to trade that money. If you're investing, I would put in only as much as you can afford to live without in the next year or so. So if you're investing, you're buying and holding index funds, buying and holding long-term stocks that you believe in. And the price fluctuation shouldn't be enough to scare you out of your position. That money is something that you won't go to zero at, but you could lose substantial amount. So only invest with what you can afford to live without, but go into trading thinking, okay, this is the money that I can afford to lose completely. And for these guys, they all have Roth IRAs or traditional IRAs set up because they are friends with me. But for this Trading 101 course, they'll be paper trading, again, on Webull. So with paper trading, you want to keep it realistic, but you want to give yourself a little bit more than you currently have, just so you can either open up new positions, kind of overtrade, get your feeling, get the sense of trading. So I suggest either starting with 2 to 5 times what you currently have. And you're supposed to simulate real life here, right? So if you have $5,000 in your account, bumping it up to $1 million just so you can take ridiculous positions, you're not gonna like have that same sense of what really a $1 million position is going to be. So I would say start with 2 to 5 times what you currently have or what you're planning on trading with real money in your paper account. You want to be working on your trading strategies, your buys, your sells, your risk management, but also you want to feel the same type of emotion that you would feel when trading with real money. And when you have extra zeros on the end of that with paper trading, you're not going to really feel any of that. So we want to keep it as realistic as possible. So when you do switch from paper trading to real trading, it's not much of a switch mentally for you. All right, so that's going to be our Trading 101 episode. Let's do a quick recap. We introduced the course. This will be a paper trading course for 3 of my friends who have never traded before. The goal is to build out a trading rule book. Each episode will put a couple rules together, break down some trading basics for you guys. I introduced the team. Each of these 3 have positively contributed to Stock Tricks with Nick, so I appreciate them before this moment. And I think this is going to be a really great series. We went over different types of accounts, the individual accounts, Roth versus traditional IRAs and paper trading accounts, how to choose your right broker, and how much money to start with. So just to wrap it up, please leave a like on the video, follow me on StockTwits, Twitter, and TikTok, and subscribe to the channel. I'll be posting these videos either once a week or once every 2 weeks. I put a breakout watch list out every Sunday morning, a live stream either on Tuesday night or Wednesday, depending on how the trading week is shaking out. And then I do a trading recap of all the stocks that I personally traded on Friday, the good, the bad, the ugly. See you guys next week for episode 2.